World financial markets are reacting to Britain's vote to leave the European Union. Stock markets around the world took a nosedive. Oil prices are way down, and the British pound fell to its lowest point in 31 years. Today, President Obama said he has talked to the leaders of Britain and Germany and promised there will be a smooth transition. British Prime Minister David Cameron announced plans to resign in October. German Chancellor Angela Merkel expressed, quote, great regret at the outcome. All right, taking a live look at the big board, the Dow Jones is now down 3.47%, about 625 points. So the question is, what does Brexit mean for you and your money? Morgan Stanley private wealth investor Eric Johnson is here now to talk about what we should all do. Welcome, Eric. Thanks for joining us.
Thanks for having me.
So the main question is, what does Brexit mean for the Americans here who are worried about their 401ks?
Well, the uncertainty reflected in the drop today is really a function of investors don't know what's next. So what does this really mean? The UK leaves the European Union. Are there other countries that are going to be also leaving the European Union, et cetera? But we think it's very important not to make any rash decisions, really just stick with a long-term investment plan.
Could this end up helping some folks who maybe want to buy or invest in British stocks right now? Is this a good time?
Well, anytime the market drops like this, it's actually great for anyone who's a saver. So if you're a worker contributing to a 401k on a regular basis, this is actually a good thing for you. You actually want prices to be as low as possible when you're investing. It's got different implications when you're using the money for retirement purposes, but as long as you're pumping money into your investments, it's actually a blessing. So I think the important thing to do is have a target. For example, if you want 5% invested in Europe, today it's worth a little less. Maybe you want to invest at these lower prices and bring it up to your target allocation.
And Eric, there's a lot of talk also right now about the price of gold. I saw that gold shot up yesterday. Should Americans be investing in gold as well? Should we be buying a bunch of coins?
Gold is up a lot today, 5 to 6%. Of course, the time to have owned gold would have been yesterday before the rise. But in general, a lot of investors will have an allocation of 3 to 5%, for example, in gold. Today, that's worth a little more. So maybe some investors will actually trim that level and put money into some things that are down today, such as European stocks. Keep things rebalanced.
And I have to wonder, for folks who maybe want to go to Europe, is this a good time for Americans to get the most bang for their buck?
Prices will definitely be fluctuating, especially in the local markets. You go over to the UK, your dollar will today go further for things like hotels and other goods and services. As far as plane tickets go, it's hard to tell.
And going forward from now, when do you think things will start to sort of stabilize? I know that they said it could take a couple of years. Is it going to be that long?
Well, it's interesting. So markets today have stabilized at a level where they actually were last week when the market was factoring in an exit. And then toward the end of last week, it looked like they were going to stay. So markets rose, and again, they've kind of fallen back to that level. So at least for the moment, they've kind of stabilized at this level of around 3.5% down for the day.
This is really unprecedented for the stock market. I mean, it's been how many years since, I don't think a country's ever left the European Union before.
Correct.
So this is sort of uncharted water here for investors.
And that's why the risk premium in the market went up today. It's uncharted territory. So really, we haven't dealt with this before, but the first reaction of a lot of emotional investors is to sell first and ask questions later.
All right, Eric Johnson with Morgan Stanley. We appreciate your time. Thank you for joining us today.